So today for me was a rough day in the market. I took 2 losses and then I exited the market. Then I had to immediately go away from the screen and get off the screens because I wanted to take another entry. I opened up my stop loss and on my first trade, and it ran my stop loss completely. And I front ran the trade, which means I didn't allow the market structure to shift before I decided to enter. I decided to see if I could get in before all of that happened, just to see what would happen. And it turned out that and I'm trying to find the right words, because I didn't want to say that my fears were realized, because if they were my fears, then why would I do that, right? If it was my fears that wasn't right, or I had any indication that it wasn't the right spot, why did I particularly take that trade? To tell you the truth, I do know why in certain circumstances I do take the trade. I still suffer a great deal of FOMO. There is nothing like to me. And this is the thing that ruins that I normally, if I blow an account, or if I have my max drawdown, this is the experience that causes that. This is the preamble to it. The first thing is, I will attempt to get into a trade and I'll have very conservative entry. If I'm going long, it won't be in 50% of a gap. It won't be above 50% of the gap. It'll be at 50 to 75% of a gap, right? And then I'll have a very liberal stop loss. What liberal for me is like what, let's say, if I'm risking, let's say, my risk would be, $100. Well, no, that's liberal. That's very conservative. I'm gonna say for me, $300 is a liberal stop loss, right? And then normally I'm going 4-to-1 on a $300, 4-to-1, 5-to-1 on $300, right? Minimum. That's the area that I'm looking for. So the worst thing for me is to have that type of dedication of finding an entry, trying to attempt to pinpoint the entry to get it right, and then the market comes within 4 or 5 ticks of my entry. I miss it because I was so concerned about having my stop loss hit that I moved my stop down. I moved my stop down too far, and then it misses me, and then it goes 10-to-1, right? So it goes 10-to-1. So and so obviously I'm going to say it right now. So I'm saying to myself, dang, I could have just gotten in. I could have just risked a little bit more, and then I could have just watched it go all the way to my take profit. So that's one of those things. And so what do I begin to do is I begin to try to get in earlier, and I try to front run, and I try to avoid putting myself into a position where the only part of the trade that I seem to get is that last clean fair value gap right before it runs to the terminus and reverses. And that's the other thing, right? I'll say, oh, wow, you know what I'll do? I'll wait till this trade comes to a slowdown. Then I'll try to get in alignment with it, right? Well, what did I see over my weekend of backtesting? Over my weekend of backtesting, what I see is if I missed a trade today and I completely missed the entire trade, if it's the morning session, I could come back in the evening session. Normally, I won't come back in the evening session, right? There's just something about fatigue of the day that I don't necessarily want to come back in the evening session and take a look in order to get involved, all right? Why? Well, why? No, I don't need to go into it. Why? We can hold that for just a second. As far as, excuse me, why I may or may not want to trade in the evening session, right? So we'll talk about the morning session, right? So there'll be another opportunity if I miss the trade. And then if I get involved as the trade begins to turn, which means that it ran to a gap, it ran liquidity, or it ran to an order block, mitigation, and price is reversing at that point. Some of the price action at those levels, just to me, sometimes look extremely confusing when I don't take into consideration the higher time frame patterns that it's just interacted with. And that's one of the things that I noticed over the weekend, where I was tracking the confluence of the Asian session and the London session. And I was just watching as the New York session would open, and it would trade to certain areas that I thought were extremely sensitive to price. Normally, it would be areas where either the high or the low of the sessions was in very close proximity to the consequent encroachment of the complementary session. I call it complementary. So I'm saying if it's the Asian session high, then it would be in close proximity to the London session consequent encroachment, and vice versa, right? Asian session or London session high or low being in close proximity to the Asian session consequent encroachment. Those areas seemed to be extremely sensitive when offering an entry. Now, what element of that am I not taking into consideration or haven't described is direction, right? Of course, it's sensitive at that spot graded, but is it going up or down, right? Is it bullish or bearish? And I found that I still have an issue with that, because now ICT keeps saying this, but he keeps saying, hey, look, you can't put everything in all at the same time. But I'm telling you, if I decide not to, that's the one element that I need to utilize. Oh, I'm not going to deal with breakers. I can't add breakers to every pie. Well, we just hit a breaker, buddy. You should have used the breaker. Like a prior day high. Well, you can't use prior day high. Well, no, prior day high was the element, right? That's what we ran. Now we just took, we just went to the downside. So, yeah, but what I was alluding to was accumulation, manipulation, and then the distribution. And then trying to get my mind wrapped around what that actually looks like. So the accumulation, let's say I make 2 or 3 days where I'm extremely profitable. When the accumulation range lines up with New York, the New York AM session, and we're accumulating at the high of several days that have traded into a daily gap. And we've been accumulating there for a day or two, right? So if you could imagine on the daily chart, you have 2 days side by side and the 3 days, right? And the middle day seems to be a flat day because we consolidated for their entire day. Those days are days that I struggle. In those days, what we normally will find is we'll find hourly charts. We'll find on the hourly chart multiple hourly candles whose highs and lows are the same price. Wrong. We'll find on that day whose opens and closes, the opening prices and the closing prices are the same price, right? So price opens at a particular level, runs to the low, goes to a particular place, takes some liquidity out, closes, opens at that same price, runs to the highs, take liquidity out, closes exactly where the prior candle opened, and then you will have this bar coding on the higher time frame. On the 15-minute chart, it's even worse because during that same time period, the 15-minute chart just has these long wicks and very, very narrow bodies. That's accumulation, and during that accumulation time, to me, what I used to see is these obvious opportunities to get involved for this quick price action, but it really has erratic distribution. Meaning, by the time you could find your way into a 1 minute fair value gap, a bearish 1 minute fair value gap, you enter that bearish 1 minute fair value gap, there's a possibility to another impulse to the high before it moves down. Then it stops you out at that point. Then it moves down aggressively, quickly, right? So the next opportunity to get involved is going to be very narrow and very quick, which means it's going to be as it's running you out on that 1 minute fair value gap, taking you up above the bearish order block. It drops right down, retests the bearish order block once, and then it distributes. And this is all happening inside of this sort of a 15-minute consolidation that goes on for 3 or 4 hours before finally creating some sort of a distribution in the later session, later in that session. But I could go on and on and on about that, but I just wanted to talk about that just for a quick second and kind of get my thoughts out about that. I'm down here at the bayou. I'm looking at this liquidity down here behind me. Let's see if I can see that liquidity. I'm looking at all the liquidity down there. Now, yeah. So we'll see if, excuse me. Oh, there's a little bird right there. Let's see what that's doing. Yeah, I mean, it's nothing. It's just a ditch, really. Just a real big ditch. Okay. Let's kind of focus up on real quick. Let's see if I can stop this.